Hello, everyone. Welcome to Small Biz Tips. Guys, guess what? I am excited. Listen, a lot of you all have been talking about acquisition, right? M&As. I brought somebody here today that's going to really go down and break this thing out for us. So I'm super excited to have him on the call. He is amazing. Jules, what's up, man?
Hey, how are you? Thanks for having me. Excited to be on.
Thank you again for doing this, brother. I'm excited for you. So, but before we jump into all those cool things you're doing with acquisition, can you share a bit more about who is Jules?
Sure. Yeah. So I'm originally from Brooklyn, New York. Ended up going to college for engineering and business. My father had a master's in aerospace, so I ended up doing like a bachelor's in mechanical and minor in aero. Really like fell in love with the whole like business side of engineering, kind of call it like industrials. During
Nice.
college, I started at like a few, teams in school and um, pretty much did a bunch of internships in like industrial technology. And then, after college, got out to California. I didn't know anybody, so did a lot of networking with like a lot of business owners, trying to just basically look for a job at the time.
Nice.
And saw that there was a lot of inventory of companies out there, and fell in love with how that intersects with technology. Um, so you can think of me as like day to day now, someone who looks for business owners, that want to sell their companies,
Mm-hmm.
and likes to add the whole like industrial tech side to old age companies. Um,
Okay. So before we even go to that, right? You said you're from Brooklyn, my friend.
yeah,
So BK, I love it. Are you like, hold on, are you a Knicks fan? Are you a Nets fan? Are you a Lakers fan? I mean, because you're in Cali now.
yeah. So I would say Lakers fan now. I mean, when I
Okay.
was in New York, it was a mix of Nets and Knicks, and now it's definitely more Lakers.
That's awesome, man. That's good. So let's talk a bit more about your background. So you went to school here, you study engineering and technology, and then you got to California. You said you didn't know anybody. So how did you go about start networking? What did you do to kind of get the ball rolling with that?
Yeah, I just kind of reached out to everybody I could talk to on LinkedIn. I mean, I made lists of all the companies within like Southern
Smart.
California. I was living at the San Diego at the time, so just anyone I could think of, anywhere that intersected like more old age, 50-year-old company manufacturing something, all the way to like startup that was 2 years old. And just reached out to everyone in the space and told them I like what you do, and it'd be cool to at least come for a tour and see what you guys are working on. And if
Wow.
it leads to something, it leads to something.
People reply.
Yeah, it's a kind of, you reach out to enough people, you're going to get some people replying, but at the same time, like I think California is a really interesting place where, especially for industrial technology, there's a lot of
Yeah.
young companies out here and a lot of very open-minded people. So a certain crowd does end up applying as well.
Nice, nice. So tell us more about, what you're doing now, right? Because from those internship to working at those companies, like what exactly are you doing now?
Yeah, so after doing internships in college, industrial tech, and then working in the space, I
Mhm.
decided that I wanted to buy, call it like a old age industrial company, and add this
Mm,
whole like tech enabled side to it. And we acquired American Sheet Metal, which is a
congrats.
thank you. And the company manufactures predominantly infrastructure components. Think like supplying large general contractors with miscellaneous metals for transit stations, airports, highways, roads, bridges, things like that. And we really built this whole like acquisition vehicle in a way where we can buy many companies over time,
Wow.
especially companies that make sense to be part of American Sheet Metal. But we came into the company and added a lot of tech to it pretty early on, and we've been really excited about that. And kind of seeing the employees and customers react to all that. It kind of it's a really interesting way to apply technology to an old age space that doesn't include you starting a startup and trying to sell somebody on something. You could just kind of do it and
It's
see their reaction
amazing.
after.
I really like one, your mindset, right? Because you were working and then you say, hey, I want to buy a company. A lot of people will say, hey, I want to start a business. Why didn't you just, hey, I'm going to start a startup like everybody else and say, I'm going to buy a company. What was that mindset? What was going on in your mind that make you say, hey, I want to actually acquire a business? Because a lot of us don't even think about acquiring businesses. We're like, let's just start a business.
Yeah, it's a good point. So I think initially it started, when I was in New York. New York
Mm,
is a big finance scene.
yeah.
But as part of finance, I knew, especially at NYU, there was a bunch of kids that like they went to college, just like they would do their 4 years of bachelor's in business and then take over their parents' company. I've
Mm.
heard all sorts of weird companies. I mean, anywhere from like elevator installation and maintenance, all the way to toilet paper manufacturing, and kind of everything in between. And so I knew like businesses could be bought per se.
Mhm.
Um, at the same time, like the path that I was heading down career wise was like, in industrial tech. It went all the way from, working at later stage startups to then
Yeah.
joining one that was a little earlier and then joining another one that was even earlier, right? And then eventually the next step was like you start your own. And I think one thing that I was like starting to get kind of frustrated by in those experiences was like how long it took for something in industrial technology, especially manufacturing, to get
Mhm.
off the ground, right? So in like
Mm.
manufacturing startups, they're not like software. I mean, you basically have to write off the first 2 to 3 years just to develop your initial prototype to even see if the market wants it, right? And
Wow.
software, I mean, you can, write the code and have it done a lot sooner. So
Yeah.
I was like, I want to do something in the physical world, something to do with manufacturing. So what's the fastest way to get to revenue, a team, etc. And it naturally made sense to acquire an existing company.
Now, let me ask you this, right? When people hear acquiring a business, they're like, oh my God, it's probably super expensive. Where do I find $10 million or $20 million to do it? Can you walk us through what does that look like?
Yeah, sure. I think from my experience, like I came from Silicon Valley, and in that,
Mm,
mindset, I mean, you have like, teenagers going out and raising hundreds and billions of dollars for whatever they muster up. And I think, one thing I think is important is to think in that mindset in the sense that like, getting funding is not as like, I don't want to say like scary as one might think.
mm,
I mean, people do it all day. Like I was in that teenager example, they do it all day. So more importantly, what you need to do is really think about like the asset itself, right?
gotcha.
So, you'd be correct in saying that like if you were just someone with no background trying to get lots and lots of money, just for them to give it to you and you go build something of your own, that would be hard. Yeah, I mean, you could definitely look at it that way, especially if it's not the next best idea. But if it's an existing business, I mean, they're weighing the company itself very strongly in their decision as to whether or not to give you money. So I think finding an asset that is really good, structuring the deal in the correct, fashion, is probably 80% of the battle, right? And the
Okay.
other 20 is like what you bring to the table, with all of it. So I'd encourage anyone starting out to think along those lines first, solve for those two first pieces, and then you can figure out the last one after.
Nice, nice. I love the fact that you mentioned, because you're not starting from scratch, you have a tangible asset. So you're able to leverage that as a collateral, I'm assuming, when you're going after the funding. Now, you also mentioned earlier about finding old manufacturer that doesn't have the technology and bringing that as your value add. Can you talk a bit more about that? Because there are a lot of businesses for sale, but a lot of us business owners sometimes don't even realize it or pay attention to it because we don't know where to start. We don't even know who's selling their businesses. So can you talk a bit more about that?
Yeah, sure. I think finding companies for sale, I mean, it could be as simple as like you just go on Google Maps and search, I don't know, pet care business near me, and then just call all of
Yeah.
them and say, let me talk to the owner and say, hey, have you thought about selling, right? I mean, that's one way to do it. Another way is just to do what you would do in real estate, which is find a broker, right? Brokers
Hmm.
know sellers and pay them, either a retainer or some will just work for you to go find the deals and bring it over, or even have some for sale already. And
Hmm.
then try to get a transaction done that way. And I think what's really important is to like really be, kind of open-minded and like, look at like industry associations, try to develop as much like credibility with potential partners as you can. Um, and then really try to niche down into something that you think you understand well, and
Yeah.
realistically you could be a seller selling to you. I think what I always tell people starting out is like, instead of thinking you're going to buy a business, pretend you're just, interviewing for the job of CEO of this small business,
Oh,
right?
wow. That's a
And if
good
you're gonna
net. Huh.
Yeah, and if you think of it that way, right? I mean, you got to ask yourself, well, why would the seller hire me, right? Like if the seller was going to step away and have you be there full time running the company for them, why would they hire you, right? So I think that's really important to consider. And if you reframe your mindset that way, this becomes a little bit less daunting and easier.
Nah, this is genius. I never thought about that because now it puts you in a position where you can see what the seller is seeing in the business, which takes me to my next thing, right? You guys purchased this business. Are you able to share how much was it? What kind of deal that you look at, in terms of, are you looking at the top line revenue or the profit? Because I know business owners that'll come to me and say, hey, my business did $3 million last year. Can I sell it for 3 million? I'm like, probably not, because that's top line revenue. Can you share a bit more about that when you guys were searching to acquire that business?
Yeah, absolutely. So I think, a lot of people starting out, they may want to understand valuations, right? Both from the buy
Mm,
and sell side. I think from the sell side, a lot of people are surprised as to maybe how little some of their companies are worth, right? Like you just
yeah.
said, right? I'm doing all this in revenue, so it must be at least worth that. Or I have X amount of dollars in tangible assets, it must at least be worth that, right? Lots of times it doesn't work that way, right? For these
Mm,
small businesses, typically it works for a multiple of basically free cash flow. And how I basically tell sellers that maybe haven't looked into this too much is like, what is left basically in the bank for you every year if you wanted to just write yourself a big distribution check, right? What is that amount that the business would generate? And that's a
oh,
rough
wow.
estimate. There's other things like add backs that go into it, but that's at least a good baseline. And then take that number and multiply it by a multiple that's standard for the industry. Now, typically, like we'll see stuff around 4 times that number. That's rough
Okay.
average, I would say. Some are lower. If it's kind of less predictable revenue, it'll be a lower multiple. If it's more predictable revenue, it'll be higher. If there's more growth in the industry, it might be higher,
Okay.
et cetera, et cetera. And I think oftentimes when we see sellers selling, it's usually when they've had a run up in their business's valuation, like they had a really good year. There's some extra
Yeah.
sales that came in. And it's kind of like a stock, right? People want to sell as at the peak, but they don't want to
The
wait till the
high.
very, very, yeah, but they don't want to wait till it's the very, very peak and then it goes down, right? And over time, the businesses will, a lot of them will fluctuate. So, we, oftentimes like we'll find people that are thinking about sales at that point, and it's their job to convince the buyer that that's sustainable. Now, not all that's going to be sustainable, but to whatever extent
Mhm.
possible, you want to base your valuation on what you think is sustainable going forward. So usually some rough number of that. Sometimes they'll use like a weighted
Mm.
average of the last 3 years or something, weigh the most current years the most or something like that, and then multiply that by 4.
Okay.
So it's typically like that. And then from there, you can worry about structure. Structure is a whole other world, right? You can figure out maybe agreement on price, but sometimes people disagree on structure. And structure is all just a risk mitigation game. How much risk are we
Yeah.
kind of splitting in this pie?
Now, for the funding of these deals, or what are we looking at? SBA loans, or is it looking at doing seller financing, or are you bringing in 10-20% on the table? Are you getting investors? What does that look like normally?
Yeah, I think it depends on the size of the deal. So
Okay.
if it's like, let's say, I don't know, 500 of EBITDA for cash flow and down, those are pretty much going to be seller finance deals.
Okay,
A
wait,
lot
wait,
of
wait. 500 EBITDA. Can you explain what that is? That's
like
500,000 in
a free
profit, or what
cash
is that?
profit. Yeah,
Okay,
not
got it.
gross profit, clean profit is basically as if, EBITDA is not exactly, that per se, but call it for simplicity's sake, 500 left over in the bank every year of profitability for you to write
Gotcha.
yourself a check and, do whatever with. So if it's something like that, I mean, typically, I mean, a lot of brokers, a lot of sellers will try to ask you to take a loan out for that, but frankly, it's a lot easier to just do a seller finance deal directly because the
Okay.
valuation won't be that high anyway. I mean, it might be like a 1.5 million to 3 million to $2 million
Yeah.
deal. Um, so I think that's one. And then if it gets over 500, now you're probably going to be, asked to take out like a small business loan, the SBA 7A loan. And
Gotcha.
that loan typically will support you to a deal around like, I don't know, 1.5, 1.7 of EBITDA,
Mm,
something like that. And then after that, you have to then use like commercial loans or private equity capital or things like that. So they're all three different realms, but like there's different buyers types for each realm. Typically, someone's in the SBA land, they want to operate it. If they're in the under 500, it's like a
okay.
cash flowing thing, or they're using their own personal money versus investors. And if it's over 1.7 of EBITDA, you're definitely going to have investors and much more complicated funding structure.
Oh, wow. That you give so many good information here, guys. Definitely go back and listen to this twice. So I want to cover something, right? You purchased this business. Tell us more about that actual business. And once you purchase it, right? Because it has employees. How was that dynamic with you guys coming in as the new owner of the business? Yeah, tell us more about that.
Yeah, I think it was interesting. When we purchased the company, they were very old school. The owner would even call himself old school. It was like file cabinets everywhere, papers, basically no technology.
Wow.
Everything was done just by gut feeling, no rhyme or real reason to a lot of stuff. And we immediately got renovated the whole actual facility. So it's a different vibe entirely. But then we did the
Mm,
same thing with the whole tech stack. We added a bunch of tech and changed around a bunch of stuff. And I think I would say we were very fortunate in a sense that we found ourselves in a situation where the owner, he hired really experienced people. I mean, some people that have been doing what they're doing for 30, 40 years. And
wow.
unfortunately, he had them kind of go through him for a lot of small decisions that they already know the answer to. So we identified that really early on and kind of took a power back to the people strategy,
Hmm.
which is in Silicon Valley, right? You'd never think to micromanage someone with 40 years experience when you're, 3 employees in a startup. You just kind of, you want to run for growth and speed. And so we did a little bit of that. And then we also found ourselves with people that were relatively adaptable to change, especially once they saw that the change was for the betterment of their work. And then on top of
Hmm.
that, I think what they noticed that, the prior owner used to take all the extra profits and put it in the bank every year for himself. For us, it was different. We kept the money in the company and then just reinvested it back in. And I think
Wow.
people appreciated that. So we like
That's
this kind of
awesome.
strategy, and we hope that other people are thinking in a similar fashion when they acquire companies versus just using it as cash flow plays and taking all the money out every year.
Now let me ask you this, right? Before you even think about acquiring that company, did you put your own team together that you say, hey, these are the people that's gonna help me get these companies and acquire them? Well, like, how was that process for you?
Yeah, so when we started, we looked at and I've been using we a lot, and so I started MSP basically on my own, and when I did that, I knew that we wanted to have a deal team together that would kind of
Hmm.
transcend more than one acquisition. So a lot of people that do business buying, they'll just be a one-man show. They'll buy
Yeah,
it and maybe there's a partner involved, something like that, but that's usually where it ends. But we wanted to build this so it actually looked more like an acquisition group, and it would,
yeah.
be able to sustain multiple deals, but then we had multiple sets of ideas and skill sets around the table. So when we started out, we built the team with, I had a CFO, our CFO Ron. He's spent 30 some years at Deloitte, retired as partner, and
Mm,
serves in CFO capacity here. We have Kenneth, who is associate. He's MBA in finance, who runs a lot of the operational stuff day to day in the acquisitions with me. And then Sam Rasati, who owns I believe it's 5 or 10 industrial companies in Tampa that does a lot of deal um, operations and acquisition advice for us. So we kind of
nice.
cover all our bases there. And then as we find stuff that let's say we did acquisition, something we weren't super expert in, we can bring in advisors as needed. And then our law firm and our accounting firms too, they're kind of silent partners in all this, but really crucial to having ready early on before you jump into the deal as well.
Wow, I love the fact that you put that team together of experts that had a lot of different backgrounds that you bring. But before we wrapped up, right? How long did it take you to actually build that team? And these are people you already had prior relationship with, or you kind of met them as you on that journey? What did that look like?
Yeah, put them together through the journey. Basically just what you would do in a Silicon Valley startup, same concept. You build your team over time. Our total search initially took us 2.5 years. We had 6 or 7 failed deals. One reason or the
Wow.
other, something failed, and eventually, we had the right people kind of join us along for the journey. And this is people that we now have a really good relationship with, and we continue on to future deals too. But I think it takes time. I think you might get your first advisor and realize that they're just not a fit, right? And it
Mm.
happens all the time. So I think it's important for anybody to understand that. You're going to take time to know who are the right people that you want to take the long term journey with. right? It's not just for one deal and done.
Yeah. No, this is fantastic. I appreciate that. For us to wrap up, I'm curious, what is one tip you would share with any business owners who may be thinking about selling their business or even acquire other businesses? What's like that one tip you think that can benefit them?
Yeah, I think it's important to not be afraid to start small with the size of the company. A lot of people, like, they look at the EBITDA and say, oh, it's too small. There's 3 people that work there, whatever it is, and they don't want it.
Yeah.
But I think once you kind of get to more advanced level of acquisition, you learn that that stuff, it matters, but often a lot less than you think. And there's other factors one should be optimizing for. But I think it's important that, like, you understand how evaluations come together, because oftentimes you might realize that the money you'd get from a sale today will not
Yeah.
achieve your long-term financial retirement goals. You need X amount of money, you'll get a half X today. So you might want to run it 3 more years and then get what you need and then try to sell, versus, go out there and test the market just to be disappointed.
Okay. Cool, cool, cool. Now, how do people get in touch with you if they want to work with you or partner with you? What does that look like?
Sure. So, we definitely always happy to talk to people who are investing in the space. I know some people, like, they want to buy small businesses, but they don't have the time, desire, or appetite for it, whatever it is. So investing in a deal is a good way to kind of do that and branch out and diversify risk. So if there's ever interest in investing in, like, anything industrial oriented,
Mm.
whether it's services or manufacturing, kind of old age stuff that, very bankable and people love, happy to talk. We're actually in the process of going through a rebrand. Our website right now is manufacturingsuccession.com, or rebranding to industrialsuccession.com, which
Nice.
both websites will actually lead you to the same place here in the next, like, 2 weeks or so. So feel free to reach out. It's just jbrenner at manufacturingsuccession.com, first initial, last name. And if it's just people looking to develop, like, just a relation to how do I buy businesses, or hey, I might want to sell my company or something like that at some point, reach out. We're always love to talk to business owners, and maybe we can at least give you guys some ideas in which way to go forward. We're always excited to meet the community, and thanks for having me on today.
Thank you, Jules. Guys, check out Jules. He is a gem full of information around acquisition. Thanks for jumping on. We're going to put all your links in the show notes, so anybody that needs access can definitely get access to it. And have an amazing one, guys. Later.